Welcome to the EmpowerYou Financial podcast. I am your host, CEO and founder of EmpowerYou Financial, Eva Palacios. What's up, guys? Oh my God, I am super excited. I am actually extra excited, if you can already tell. And for those of you who are catching it on the YouTube, you can clearly see why I'm excited. Today we have a special guest.
What up? What up?
We got Mr. David Garcia here. And a lot of you who have been following me for years, have seen him. It's been a while. It's been a while. Yep. And it's so crazy because we were just talking about how this is your first time actually on set.
Yep, in person, live. Last podcast was over Zoom. I had a screen, was able to hide behind that. Now we out in person, live. It's different. It's fun though. It's fun. We feel the energy now. I love it.
Right.
Yeah.
It's definitely a whole different vibe. And it's about time. Guys, I am so sorry. I be sleeping on people. It's been a minute.
Been too long.
I've been sleeping on people, sleeping on things, and we're gonna get to that in a little bit. But first, yes, I wanted to bring David on here because I have been, if y'all haven't noticed, in the last couple of months, I've really been just talking out loud about life insurance with living benefits and leaving a legacy and protecting our families. And honestly, I don't know why I wasn't talking about it more, especially considering the losses that we've had in our family.
Right.
And it has nothing to do with being uncomfortable. It's just that I think with many, right, we're just go. We're go, work. Make sure that we're balancing things out that we just kind of forget.
Yeah, and it's not really a priority because we don't really grow up talking about this subject.
Right.
And that's what I really love being in the industry. I talk about it a lot at home. Even my kids, every time I'm on a phone call or on a Zoom call, my son Grayson's like, "Are you on life insurance call? Are you guys talking about life insurance?" And so it's part of his vocabulary growing up. So when he becomes a teenager or young adult, it won't be new territory for him, right? It'll be something that's relatable, something that's comfortable to him, something he's been saving in for 15, 20 years, later from now. And it's just, I really appreciate that we're able to speak that language in the household.
That is so true. I mean, sometimes I think back to growing up and I'm like, what were we listening to growing up? Definitely a lot of TV, a lot of cartoons, a lot of family shows. I legit feel like I was raised in front of a TV.
Yeah, I had no idea about personal development, who Jim Ron was.
Nope.
I grew up playing sports, so our way to pump up for games was listening to music, right?
Yeah.
Having your favorite song, having your playlist ready before the game, and that was it. It was music and TV, entertainment basically.
Yeah.
Right? So now transitioning into this entrepreneur life, right? Self-employment, you're really transitioning to what you're taking in.
Yes.
So part of that is leveling up, but also sharing that and having those conversations within the household, with your spouse, with your kids. And it's new, it's different. It's not something we're used to.
Yeah. And it's so crazy because, I think I look at our relationship. I look at, the Lions. I look at our meetups. I look at just what rooms we're in. And sometimes, if you ever catch me in the zone, with a moment by myself, it's because I catch myself and I put myself in a moment of reflection. And I look all around and I'm like, man, to be not just number one, to be in the room, but to be in the room knowing the information that is exchanged in this room is just so powerful. Right? Because you could be in a room to where it's nothing but chaos, nonsense, bad energy, talking about all kinds of things that don't even matter.
Yeah.
Or you can be in a room where it's just financial, credit, wealth building, breaking those generational curses, talking about the traumas and yes, we were raised in a certain way, but we don't have to stay there.
Yeah.
And we can literally change the conversations. And I'm gonna be real, it starts with me. In my family, it starts with me.
Yeah.
I mean, what about you? Let's let people know who is David? Who's David? Where you from? What you do? And let's talk about it because I think a lot of the times too, it's, especially we're on social media, a lot of people may assume, oh, they were raised in this environment. They know this stuff. But like, let's be real and authentic with the audience. Like, where you come from? How were you raised?
I grew up and raised in Stockton, all right? The 209, not known for being a very wealthy city, high income city, right? I think our average income right now is $50,000 a year household income, right? Around that. And again, the challenge is because our household expenses is around the same amount, right? Which is why, okay, if we're so stuck in that, whatever comes in goes out, there doesn't leave room for wealth building, right? Saving for yourself, investing for yourself. And so I came from a really old school mentality, right? Save, right? Never invest. Don't spend your money. I mean, it would get to the point where when I wanted to go to the store to buy some Jordans, it would take me 3, 4, 5 trips just to look at them. Do I really want to buy these Jordans for myself? Right? Because they cost $150, $200, whatever they were.
Yeah.
Right? My dad was like, what are you doing? Why do you keep leaving the house for? I'm like, well, because I'm stuck in this mindset of don't let money go, because I didn't grow up with an abundance of it. Right. And so, I grew up at a warehouse background where my dad was in warehouse. My brothers were in warehouse. So I kind of fell into that environment. My first career was warehouse.
Yeah.
Right. Now I grew to be a supervisor in the company, which was making pretty good income for young 20s. Got my degree at Sacramento State University. Never used it. Have my degree. Never used it like a lot of us out there. But I wanted to get it to let my kids know, hey, if college is an option, they're not going to be the first ones, right? They now have a path to get where they want to be, and it won't be new to them. So, from there, I knew warehouse wasn't for me, right? Long hours, working overnight, working holidays, some weekends. It wasn't for me. So that's when I transitioned into the self-employed world of being a newspaper contractor, right? So I would contract people to deliver newspapers, and the challenging part was trying to find people to deliver newspapers. Because again, 7 nights a week, delivering papers, not a great paying job. So I had to be out there throwing papers every single night, basically your paper boy.
That's crazy, because I'm like, we still deliver newspapers? Like, newspapers still exist?
Right, yeah.
Like, I remember growing up, and every morning, like, we go get the newspaper. Now, like, I don't know, I go running, and I don't see no newspapers. So, like, is that still a thing?
Yeah, it's a thing, but we're not on bikes anymore, right? And that's why, because not everyone gets a paper, right? So now they have to drive blocks, drive to different cities. So I was running multiple counties. And being self-employed, I was still having to trade in my time to make money. And that's where the challenge was with a growing family, right? I have 4 kids, a beautiful wife, growing family. It's really hard to make time for them, but also make time for myself. But I guess looking at my background, you don't see finances anywhere, right? So I was really introduced to this about 5 years ago. Right, became a client first. Knew life insurance was important. Didn't really know where to go to get the information because it wasn't really talked about in our community.
Yeah.
So thankfully, I came across a policy with living benefits and was a client first. Got into an accident. I'll share my story a little bit deeper in a little bit, but then transitioned to a licensed agent because of how much the policy benefited us.
Right.
And then wanted to share this information with people because it wasn't talked about a lot.
So let me pause you right there. Did your parents before this, did they have life policies?
Nope, they didn't have life insurance.
Nothing. Same with mine. Like as you're sharing your story about how you grew up, like me too. Like, my dad worked for Bank of America for 35 plus years. Guess what? He had a great retirement. Great retirement. No life insurance. Mom, nothing. No retirement or life insurance. So by the time I got involved, in essence, it was too late because she just already had all these health conditions that there was just no way. And it's again, this isn't taught in schools. It's not talked about in the household. So like literally, we're the first ones to now bring it into our families to change the generations.
Yep.
So, okay.
Yeah. And that was the challenging part, was trying to introduce this to my family, my parents, my close ones. It was very new to them. Like, no, I already have life insurance. I'm good. Or I have it through work. So now it's about, okay, let me educate on the different types and let me get more educated myself so I know how to respond, guide, and lead and really customize a plan to fit them, right? Because people are in their 20s, 30s, 40s. The policies need to be designed to the individual. It's not your typical auto and home. Let me throw you a quote. What do you feel? Right? This is where a lot of people, hey, just send me a quote. I'm like, no, this is life. This is customized. Right. This is deeper than any other policy out there. So that's where me taking time to look more into it until I got to a point where I was able to, I guess, be more independent and share with more of my family, friends, and the community is where I started transitioning in the business a lot.
Wow. Wow. And I love when you say it needs to be customized, because we don't think, right? We kind of lump sum this product like we're insuring our vehicles,
Right?
like we are insuring our properties, like we're insuring things,
Our phones.
our
right?
phones. Oh my gosh. Man, don't even get me started on how many people insure their phones and they don't even insure themselves.
Right.
Guys, this is why we're here though, is to educate. So let me take it back, because there's one important thing that I do want to talk about, is, because we're here to educate, is, but David, I already have life insurance through my work.
Right.
No, I'm good. My work got me.
Yep.
Let's talk to the people what that really means and things to understand about a life insurance policy that is a benefit through your employer. Like, what should people really understand about that?
Yeah. So think about life insurance through work is very similar to like health insurance through work. Whenever you quit or leave or retire from that job, that health insurance coverage doesn't follow you, right? Neither will that life insurance policy, right? It's around while you're employed. And if you're there for 5, 10, 15 years, every year you wait to get insured, again, we don't buy life insurance with just our bank account. We buy it with our health as well.
Right.
So who knows if 5, 10, 15 years down the road, if we'll still qualify due to our health, but also it'll be more expensive and challenging to get when we're older.
Yes.
Right. Very similar to pushing off retirement. The longer we wait, the more challenging it becomes to save for retirement. Where now it becomes unaffordable. And that's where we see a lot more people working into their mid to late 60s, early 70s.
Right.
Right. Because of lack of information.
Right. And in essence, and let's dig a little bit deeper about how those employer, insurance policies work. It's a group. I mean, like, let's be real. The reason it's free or it's a low cost benefit, it's because your employer purchased it as a group policy.
Right. Correct.
Therefore, in essence, they can give it to you, free or pennies per se, but also the coverage.
Yeah.
The coverage may not even be enough for you and your family.
Yeah.
Let's talk about that, because, at the job that I was at for 17 years, I started at 17, so I didn't know no better. I learned as I grew with the company. But again, there was nobody telling me, Eva, you just had a baby. It's time to get more. You just got married. It's time to get more. You now have 3 kids. It's time to get more. Nobody was telling me.
Yeah.
And not until really I started getting, good with, finances and wealth building, I looked at my work policy and they were like, well, if you pass while you are employed, we'll pay you 2 times your annual salary. And I thought to myself, that's not even enough.
No.
Like, okay, 2 times of my annual salary if I'm no longer here.
Yeah.
That's not even going to buy 2 years.
Nope.
Or probably less, depending upon what our financial situation was, right? So guys, you really need to understand what you have and how it works, because God forbid something happen and you just don't have enough. And that was one thing that really stood out. I was like, wait a minute, hold the phone. And this is where sometimes, again, we work, we go, and we don't pay attention. All we know is we got life insurance, but we don't even know how it works.
Yep.
We don't even know if it's enough coverage. Oh my goodness.
Yep. They think we're good, right? Most people I talk to, they know they're insured. Sometimes they don't even remember the name of the company.
Oh, yeah.
They just understand they have a premium. They don't know what that premium means, because most people see life insurance as an expense.
Yes.
Right. So if we think about it as a cost, as most average life insurance agent will focus on the cost and get you a low cost policy. Yep. And every time we look for a discounted rate, we're going to get a discounted experience. Life insurance on vacations, on experiences, right? So this is where, okay, if we feel we need more life insurance, that's more cost. Why do we need more cost? Yeah. Right? So that's where we got to really focus on what is the value of it. And as we grow in our business or job or grow in family, we need more value. We're worth more. So we need more. And that's what if we focus and understand the value, we're like, okay, I know I want multiple millions to pass down, but also the way I'm utilizing it different ways. But Also, most families I run into, they're underinsured. Like you mentioned, we'll give you 1 year's worth of income, 2 years worth of income. Is that enough time for my spouse to make the adjustments to make up for the financial burden that was just lost? Right. Give her time to mourn, pay for the bills, pay for the burial, all this stuff that goes into the loss.
And a good portion of it is going to go towards the burial and the funeral expenses. Yep. So right there, let's just pretend, back then, let's just pretend, they would have cashed out $200,000. Well, guess what? 20, 30, 40 grand of it is now going towards funeral and burial. And it's like, okay, now you have this much to figure out what to do with. Oh my gosh.
Right. So for example, I have a close friend of mine. She said I can share her story. So they have $50,000 policies each, husband and wife. Wife is a stay-at-home mom. Husband makes about $150,000 a year. And I asked her, I was like, if something were to happen to him, how long would that $50,000 last you guys?
Man.
She said maybe about 3 to 4 months.
Yeah.
Right. Is that enough time for you to mourn, get over the loss, and now make the adjustments to find a job that's going to pay you $150,000? Right. So those are things you got to think about, right? Finding a plan that fits your family, fits your needs, fits your goals. There's multiple different ways to go or approach to what does it look like to be fully insured through a policy. Yeah. Right. So this is where if you guys are getting quotes from insurance agents, ask them to stop, right? Let's sit down and customize a plan and go over how do we customize and make sure it fits us today, 5 years from now, 10 years from now. And again, if you ever have a growing family or, get a raise or increase in salary, you guys can always get multiple policies, right? There's no limit on how many policies you have. There's only a limit on how much coverage you get, right? Because again, what life insurance is, the purpose of it is to replace income, replace money, wealth building. So you have to have income or assets to qualify. Right.
That's so good. Okay, so we just, talked about, in essence, group policies through employers. Let's talk about like another basic, because I know a lot of people out there, me included, like I didn't know. I'm gonna be honest. Like we had life insurance policies and I was like, we good. And then I met David through a networking group almost 5 years ago. And through that networking group, we have opportunity to, in essence, talk about what we do and why we're so passionate about it. And I remember, David sharing his story of how he became a client first. And that right there was super compelling. So let's start there and let's dig deep on that. And then we can transition to talking about the different types of policies that people hear, but they still don't understand how they work.
Right. So what really made me make a decision on this company as far as getting a life insurance right away, because again, life insurance, I never really dug deep into it. I was always joked about life insurance as that's a bet that I can't cash out on. Right. That's for the family. How am I ever going to see the money? So I always put it off. Right. But it wasn't until I heard about this concept called living benefits. Right. And most people think they have living benefits because they think it's the ability to access their cash value. Right. Living benefits is different. Every permanent policy builds cash value. Okay. What living benefits are, it allows you to accelerate your death benefit in life. Right. Some qualifying events need to happen, which we'll go over in a minute, but that's what living benefits are. And that's what stood out to me when getting this policy, because it was very new to the industry. Yeah. Most life insurance policies, we have to die to use, right? So once I heard about these living benefits, right, on top of that, they were added for free additional features to a policy. I'm like, yes, let's go. Let's figure out what customized plan works best for me. And then 4 months later, after I got that policy, I got in a car accident. Never broken a bone in my body. Couldn't predict this was going to happen. I'm not a too extremist. I'm a homebody, right? But a lot of driving, going home from newspapers, traffic came to a complete stop, rear-ended the car in front of me and fractured my pelvis, dislocated my femur, and was rushed over to the county hospital.
Wow.
Right? Didn't know what was going on. Like I said, never broke a bone in my body. At the time, my wife was pregnant with our 4th kid. We were in the middle of, buying a house, but also selling our house before the baby was born. Right? Life was happening, right? Life will continue to happen. I was coaching sports as well. We had 3 kids at the time. And, the doctor said I'd be out of work for about 7 months.
Wow.
Right? They said, sorry, Dave, your leg is never going to be the same. Right? When I think about it now, I'm like, you know what, doc? He was right. My leg is never the same. Yeah. Right? Never before that day I could have impacted people like I do now because of this injury. Right? So now, again, because we had living benefits, right? National Life Group, the insurance company we're partnered with, issued me a check for $60,000 tax-free as an early acceleration of my death benefit.
Okay, wait, hold on. We need to break that down because I know when you told me that story, I'm like, wait a minute. Life insurance that we all believe we cannot access until we pass. And once we're passed, like we don't access it, the family accesses it. Now, not now, it's been around, but in your case, they in essence cashed you out. Right. Not the entire thing, but you got like 60 grand.
Yep.
Tax free. Tax free to basically care for you and your family because now you can't work.
Right.
You're recovering. And I can't even fathom the idea of Lauren being pregnant with Emmy and trying to figure out how I'm going to earn an income. If it wasn't for that, like, where would you guys be?
Oh, man. Honestly, it would have been a challenge. Again, we had savings, but that savings, the goal was to buy a house.
Yeah.
Right. So 7 months not being able to work, trying to buy a house, trying to juggle a new family, right? A newborn. Who knows? And this is the reason why most foreclosures, most bankruptcies, right, are due to medical related bills and medical related expenses.
Yes.
Right. Because typically when it happens to us, whether it's a heart attack, stroke, cancer, injury, something that takes us out of work, loss of income, we're spending more time in the hospital for recovery, treatment, bills stack up.
Yeah.
Right. We see more and more GoFundMe accounts due to these medical related bills and issues.
Yeah.
But never really replaces our income.
Yeah.
Right. So being able to utilize this tool to protect us financially, accelerate that money tax free that we do not have to pay back.
Yep.
Just gave us a huge, I guess, ability to keep going without worrying about where's grocery going to come from next month. Right?
Absolutely.
How are we going to keep the lights on? How are we going to continue our lifestyle with the kids in sports, buy this new home, keep going after the goals we were trying to accomplish?
And I just want to take a moment to play back a worst case scenario, right? You were in transition of buying a house, saving for the house. Let's say you didn't have living benefits. Now you have no income. You guys would have dipped into the savings that then prevents you from buying the house. And who knows, like you run out of money. Now you can't pay the car. Now there's a repossession. You can't buy the house. Now you got to go into renting. Like it is a downward spiral of just all this ugliness. And see, these are the things that nobody thinks about and nobody expects. But unless we are protected, it's crazy because we had a conversation earlier this morning. We had a consult with a good friend of mine. And I'm like, man, you don't think about these things until somebody presents it, which is why I'm like, we need to talk more about this.
Yeah.
We need to talk more about this because when you don't have that coverage, well, first of all, if you don't have it, you don't know no different.
Right.
But I will say this, when you have it, I know I tend to walk around a little bit different.
Yeah.
I walk around with a different type of posture, knowing if something were to happen, my kids are good.
Right.
My kids are good. And not just that, it's so crazy because sometimes I'm like, do people think like I think? Because literally, this may sound crazy, but literally I thought to myself, if something happened to me, my boys have David. And here's why. When Will passed, and for those, who are new listeners, I lost my husband almost 2 years ago in September. And we lost him due to COVID. And both of us were sick with COVID. And I just remember being in the bed and just praying. And we were sick, legit COVID for 14 days. And he ended up in the hospital and he didn't make it. And I'm still I'm still fighting for my life through COVID while he's in the hospital, and I'm trying to deal with all of this. And then, when we lost him, I just remember, there's little things, I don't remember everything, but there's little things that happened that really stood out. And one of those was David. He called me and he was like, I know you're going through a lot. I've already made the phone call. I've already submitted and let NLG know. So you're going to get an email. You're going to get a DocuSign. fill out that paperwork as quickly as you can. Then they're going to call you. They're going to ask you some questions, and they're going to start that process. And all I thought was, thank goodness for you. I don't know anybody, and maybe guys, like if you've experienced this, please share. Like, please comment and let us know. But I don't know anybody that has lost somebody that said their insurance person called them to help them process this paperwork. Because I promise you guys, if you've gone through any type of loss, paperwork is the last thing you're going to want to think about. Finances are the last thing you're thinking about. But knowing that you've got somebody in your corner that, in essence, is there because they know, they're familiar, they're with the company, that's a level of service. Guys, that's another thing. Like, I'm always preaching about, don't just do business to do business. Like, do business with intention. Right. Do business with people who provide you that level of service, that operate in excellence because this is what they were born to do. So I remember that part, and I just thought to myself, man, if anything were to happen to me, David's got us.
I got you.
Boys, my boys, like, they have all these people that I know. Something were to happen, I'm in heaven. I'm like, I'm good.
Yeah, and that was honestly a new experience for me. Like, it was challenging because, again, you guys being close friends of mine, it was challenging, but I knew it was my responsibility to take leadership and allow you that time to focus on family, right? Where I took care of the finances, took care of the paperwork, took care of the calls, and I forget it's insurance, right? There's claims, there's paperwork that needs to be done, and I guess what I really leaned on a lot was my experience, right? My living benefit claim, it allowed me to sit as a client, but also an agent as well, to kind of see the process and understand the paperwork, understand and build relationships with our, company and case managers and whatnot. But it was definitely prepared me for the next event.
Absolutely. Right? And that's so important, right? It's so important. I mean, it is devastating to have to go through and file a claim for yourself or file a claim for one of your clients. But at the end of the day, you don't have to. You don't have to.
Right.
But you do, because that's who you are and that's your heart. And that's super important, because while you do that, you're learning. And every time we learn, we know more, we can, in essence, do better and provide an even exceptional service for the next time this happens.
Right.
So that right there is huge, guys. So let's transition a little bit and let's talk about, the two types of common insurances that people are familiar with, which is the whole life and the term.
Yeah.
Break those down.
Yep,
What
yep.
do those mean?
Yeah, so they actually fall into two different categories. With the term, I always break down as very like renting properties, right? Then we have permanent, which when people think of a permanent policy, they automatically think about whole, right? Because it's been around for the longest, right? But just like everything else is transitioning in this world, right? They transition and created a hybrid of the index universal life type of policy. But let me go back and break down term. Term is just like renting a house, right? You rent a policy for a term amount of years, whether it's 10, 15, 20, 30 years.
Okay.
Right? All you're doing is paying for the cost of insurance to insure you for that time frame. When your term is up, right, you have to reapply. So let's say use a 10-year term as example. Okay. 10 years later, you're 10 years older, so your health has declined a little bit, but also your mortality rate has shrunken because you're now older. So cost of insurance will increase, and who knows if we'll still qualify because life happens.
Wow.
Right? So people getting 30-year terms at the young age of 20 where cost of insurance is very low, and then now they're 50 years old, 30 years later, and they go to get another term policy. That term policy is so expensive and very unaffordable for most.
Wow. So in essence, let's, devil's advocate. I have a term policy. I'm making my monthly payments. And if I were to pass, then obviously the family gets what I paid for. But once 10 years passes, like, that no longer works.
Yeah, cash is gone. All that savings.
So all that money I put in for 10 years.
Correct.
Gone.
Correct. Yeah.
What
so people go after it because it's a lower cost. It's affordable today.
I was going to ask you, like, why do people even do that? Like, that doesn't even sound like that's a good deal.
Yeah, because again, people think about life insurance is an expense, right? They're not customized. They're given quotes. So now that's where the customization comes into play to show them the value and how they can make it more personal for themselves.
Got it.
And that's where people are like, well, I just spent 10 years worth of premium. What happened to all that?
Yeah.
Well, it's lost. So in the long term, the long run, term insurance in essence gets more expensive because they typically less than 1% of people actually pass away within their term.
Wow.
So all that money being lost, saved to the insurance company, again, lost for the client. But again, it did its purpose where it protected you for those set amount of years you signed up for.
Yeah.
And then they got to reapply.
But the things to consider is once it's done,
Mm-hmm.
you in essence paid and your money is gone.
Right.
Number one. And number two, you're older.
Yeah.
So now when you go into it again, it's going to be more expensive. Generally speaking, more expensive because you are older and your health in essence may have declined. Right. Okay.
Yeah. And again, wow. I'm not here to bash term because again, every policy has its purpose.
Absolutely.
Just like people, right? Not everyone jumps in and buys their home for the first house they live in. Some people rent for a year or two. But if you guys have term or make that your first option, also make it an option to upgrade and get your permanent policy soon, right? Make that part of the game plan. Yes. Don't just stick with term. Okay, I'm going to buy term and invest the difference. That's very old school mentality. The challenge with most Americans today is they buy term and spend the difference. They don't invest it. They don't save it, right? They go and spend it. So this is where when we package things together with our permanent policy, where now your life insurance is taken care of, and now money is growing and working for you within the policy. And that's where the permanent policies come into play, right? So the two types of permanent policies are whole life and universal life, right? Whole life, we write all three policies, but whole life has a higher cost of insurance because of the guarantees that are tied to it, right? Typically a policy more geared for people who are planning for estate planning, right? But again, it's a higher cost of insurance because they have these guaranteed riders to make sure the policy doesn't lapse long terms. Lapse just means run out of funding, right? Because the last thing you want to do is pay into a policy for 20 years, but it's not funded correctly. And all of a sudden, year 21, that policy is gone because it ran out of funds to support the policy.
Wow.
Okay, so whole life is more expensive, but also it grows with a fixed rate, right? Very slow and steady. This is where universal life kind of transition and making a bigger impact now, as long as it's structured the right way, right? It's got to be customized the right way to fit whatever goal you're going after with that policy. So universal life has a lower cost of insurance than whole life, but also there's different options of way you can choose your money to grow within the policy. There's fixed. You can choose fixed. If you like slow and steady, like whole life, and you know what you're going to get, you can choose a fixed universal life, or you can choose an index universal life. Right? Indexing allows you to grow your money with the market. But the beautiful thing about indexing is it has a 0% floor, right? Which means anytime the market performs negative, like last year, we lock in your gains, lock in your contribution, and our clients never lose $1.
Wow.
Yep, so
which that basically means, for if any of you have ever heard the acronym or the word IUL, that's exactly what that is. And when David educated me on this, I'm like, wait, what? I put into something that I don't lose money on, but if something were to happen to me in terms of sickness, illness, or injury, I have access to that. So let the people know. Let the people know, because I'm like,
yes.
What in the world? And the thing is it's been around for years, but again, we get fixated on the whole, the term, the group policies that we hear something new and we're like, nah, that's for the rich folks.
Yep.
And that we can't afford that.
Yeah.
That's over my head. I don't understand it. It sounds too good to be true. No, I'm good, David.
Yeah. And that's what people think. People think life insurance is for the wealthy, right? And typically it's for the wealthy, usually because the wealthy people share the information amongst other wealthy people. Right. So you don't have to be wealthy to do the things that they do. You just have to have that wealthy mindset and be able to receive the information, be open to learning, and make it a target for, hey, if today doesn't work for me to save, let me make it a target so I can get things in order so I can start saving up for that plan or whatever it is we have working for us. So again, there are companies out there who specialize and only offer term with the death benefit. Right. Some companies out there who offer term and permanent, whether it's whole life or universal life, but only a death benefit. Again, where we come in, we can give you the same thing, death benefit, but now we're adding these living benefits for free, right? Giving you access to your death benefit in life, right? just like it happened in my situation. I had no cash value in my policy. It was a permanent policy, but I just received that policy 4 months prior to my accident.
Wow.
Right. But because these living benefits allows us to access that death benefit. Right. So what that means is if someone has some kind of terminal illness, right, temporary or permanent disability, or if they have a heart attack, stroke, cancer, or maybe they can't do 2 out of the 6 daily living activities, right? Any of those qualifying events allows them to accelerate their death benefit in life tax-free up to $1.5 million. Right? I mean, how often have you guys heard of a car accident paying out somebody in life, or a life insurance policy paying out someone in life due to a car accident and that person's still living?
Right.
Right? Health insurance take care of the bills for the hospital.
Yep.
Right? Auto insurance take care of the accident.
Yep.
Nothing to protect most of our income.
Right.
And that's where living benefits came into play and definitely blessed our family in a major way.
That's so huge. That's so huge. And as you're talking and let me be open and transparent, because many of y'all think like, oh, Eva got it all together. Like she the financial person, she got it all. Let's be real, guys. Before I met David, we had insurance and it wasn't enough. And it wasn't enough. And not until we got educated and he really broke it down to help us understand. And even then, when you came into our lives, like we started with little policies, because I'm like, okay, hold on, like finances need to make sense. Like we could only afford this monthly payment. This was before EmpowerYou was even created. Like this was when I was still, in my network marketing days, which I was definitely making some money, but I also had a certain level of lifestyle. So I'm like, okay, hold on, I can only afford this. And I'm going to be real, like, man, like I wish I was like, no, like we need to have $1 million policies. It wasn't $1 million, like it was a $250,000 policy, which is still great, but that wasn't enough. It wasn't enough. So when hubby, had like, it was always on the to-do list to increase and obtain more policies, a bigger policy. Now, even though that 250 did come with the living benefits, it wasn't enough. And so, when hubby passed, like, it wasn't enough. And this is why I'm like, okay, we need to share this information and not just get stuck with, I got something, it's enough, when really, if you got that years ago, it's not enough today. Because I don't know where you're at, but food is more expensive, gas, housing, like everything increases. And we're forgetting about protecting our most prized possessions. Yeah. And making sure we're increasing that too.
Yep. And again, that's a huge part. Protection. Want to make sure income's protected, family's protected. But now a lot of us need a reason to move forward with anything, right? And as we're paying this premium, it's like, what's going on? Like, where's this premium going? I mean, yes, we want to protect the family, but we always feel like we have time to protect the family. So now once you understand and customize the policy fit to you, you understand, okay, this premium is working for me in multiple ways. I can use it to pay the permanent policy for 20 years and I don't have to pay it anymore, but it's protected for the rest of my life, right? Or I can customize it to where as I'm paying into it, create a tax-free retirement to last my lifetime, right? I mean, how many of you guys are sick of paying taxes now? Why would you want to pay taxes in retirement when we're on a fixed income and kids are out the house, right? Less write-offs, less dependents, right? So this is where we really go into detail or customizing the details of, do you want to pay taxes in retirement? Well, let's customize a plan to help you reach that goal, right?
Okay, so let's talk a little bit about that, because I know many of the people out there, including myself, I'm like, wait a minute. We're talking about life insurance with living benefits, but now you're talking about retirement? How does this life insurance help with my retirement?
Yep. Again, this is why the wealthy use it, because it's a cash savings vehicle that allows them to grow without risk. Okay. Right? Indexing with the 0% floor, they don't lose money, and every dollar they take out of their policy is tax-free. Right? And again, what I love most about it compared to other traditional retirement accounts, a lot of traditional retirement accounts limit you on how many times you can access that money.
Facts.
Right? So now when you understand you're building your life insurance, you're building the cash value, you're basically creating a line of credit within your policy that you can now utilize, borrow against, and maybe pay off debt, pay off credit cards. And just like you pay the banks back, you can now pay yourself back.
Okay. Right? That right there. Let's pause. Let's pause because now, like, I'm sure everybody got the emoji with the little psh in the brain. Let's pause for a minute there, but let's talk about how you're talking about traditional retirement type plans. Let's say, for example, the 401k.
Mm-hmm.
You could only touch that tax-free, penalty-free for certain reasons.
Right.
Right? But this, what you got, is complete. In essence, it gives you more benefits.
Right. More options. Yeah. More options and whatever time of need you have. Right.
So let's give that example, right? Because I know, like, I have a coaching, financial coaching, credit coaching, and when people go through a hardship, they go and look at, okay, what do I got? What can I touch? Like, what do I have to remedy or to help with whatever hardship happens? Mm-hmm. And, and some people resort to credit cards. That's one way, definitely not the best way, but people resort to credit cards. People resort to savings, liquid savings, because that's easy. You just get it. But then a lot of people, they're like, well, wait a minute. I got to retire. I got a 401k. Yeah. Like, how can I touch that? What are the limitations on that?
Yep. So I every 401k company has their different limitations. COVID has not made it easy for people, right? They've actually placed more restrictions on accessing our money with 401ks. So I've talked to some companies who only allow you to take up 2 loans per year.
Yeah.
Or have 2 loans out at a time. And you have to pay that loan back as you borrow the money, right? And if you want to ever withdraw money, there has to be a hardship going on, whether it's a medical concern or maybe you're doing an upgrade to your house. It has to be some kind of hardship. Maybe the spouse lost an income, right? So there's very limited ways for us to access that money, right? And of course, we've built and saved into that plan to create that money, but also with the policy, you could build and save into that plan, create money that you can now utilize and have more flexibility on when to utilize that cash value.
So you don't need no reason to access the money that you just put in.
Nope. You just
no
need
reason at all.
Nope. You just need to build it, right? I always use an analogy. Wow. It's very similar to a property, right? Before you borrow from your house, you have to build appreciation, right? Same concept with your policy. You have to build that appreciation in it.
So, and again, like I was employee for 17 years. And even now, I will admit I do coach a little bit different because of the new information that I have. But what are we taught? Like, we're taught to go to school, get a good job, stay there till retirement, and make sure you put into your retirement plans. Okay, so we're putting into our 401k, and then when life hits, we can't even touch that unless the 401k administrator, the company that it's with, says it's okay.
Right. Yep.
And then, not to mention, depends on who they choose to invest your money with, you could suffer losses. But over here, you put your money in, once it reaches a certain level in terms of dollars accumulated, now you can touch it for whatever reason.
Whatever reason you like. Yep. Wow. So I've had clients borrow within the first 4 to 5 months of their policy. Some clients borrow within the first 2 to 3 years. So it always depends on, again, how we customize your plan.
And how much they're putting in based on whatever they got. Okay.
Yep.
Okay.
It's like when you got a house, right? Well, how much do I need to save into the house before I borrow from it, right? Well, what is the value of the house, right? $100,000 house would only require you to save or have $20,000 of equity. Right. $1 million house would require you to have $200,000 of equity, right? So it depends on so many parameters, right? How we fund the policy, the size of the policy, and then of course our age.
Wow.
Right? But even going back to her point with accessing the money, I had a business partner, right? She didn't have an IUL. This was before she got into the business. She had some health concerns, and then she was diagnosed to have cancer. So again, boom, hardship. So she accelerated withdrew her 401k to pay for the medical expenses, and she lost 50%.
Oh,
early withdrawal penalty, taxes. Again, with the same $1 million policy I would have had, I could have access to up to $700,000 tax-free.
What?
Again, just knowing your options, knowing what's out there for you guys. And this is where having that conversation to see, okay, what is the best fit for my future, for my family's future, and today.
and in case, right? We don't know. We don't know when. We don't know what, but we know. We know. We're going to pass at one point in time. And this is, for me, it's like we all spend money. Mm-hmm. The question is are we spending it in the right places, in the right vehicles, in the right people, in the right businesses for it to benefit you and your family the most? Man, okay, so I'm gonna let you guys know, like, this is gonna be a 3-part series, because this is like, we got way more to share, and this is just the basics part, right? You know, the recap, we talked about the group life, the whole, the term, the universal. Like, the next episode, like, we're gonna take it up a notch. We're gonna take it up a notch in terms of like what the wealthy people are doing, and I'm not gonna even say wealthy, the educated people,
right? Wealthy mindset. Really.
Wealthy mindset. Yeah. Absolutely. So with that being said, thank you guys. We're going to bring David back on the next episode. We're going to dig deeper. But man, I am just so glad that you took time out of your day.
Yeah, thanks for having me.
To educate and empower everybody. Guys, if you found value in this episode, do me a favor and share. Share this on all your social media platforms. It's on YouTube. Share it on there. You know, throw it on your Facebook. Share it in your stories. Because guys, information changes situations. And that is exactly what Empower You is all about. We're here to help you live life on your own terms through financial literacy and credit education. All right, guys, have a great day. Bye.
Take a look at what you see, what I become. It ain't hard to tell. Young legend, I'm an icon.